What's up, YouTube? This is Todd Horse with TastyTracker.com. Today I'm going to be talking about my bear thesis. Pretty simple here. Basically, when the market's been going up and up and up and up, naturally your positions are going to become more bearish to begin with. But I also don't want to continue to put on positions that are too bullish. I might make a day trade, or I'll definitely make a day trade that's bullish in nature every day, as long as the market goes up. But on my swing trades, I'm going to have an overall bearish tilt. So that way, when the markets do finally turn around, I'll be in a great position to capitalize on that. So anyway, first bullet point here. For day trading, you have to follow the trend. If you're trying to go counter trend or predicting the moves too far ahead of when they're going to happen, it's probably not going to materialize. I mean, yes, you can see when the current move is topping out or bottoming out, and then it's going to flip. But a lot of times, it's not going to have a tremendous move in the opposite direction. It might come back to a little bit of an equilibrium. But I mean, typically it doesn't drop and then shoot way back up to flat and then continue to exceed that by a large margin. Of course, it obviously does happen. But anyway, for swing trading, you can either play the trend if it's a long-term, we'll say, bullish market like we've had. You can play a bullish play, or you can try to play a future trend that's either counter what the current move is or flat. And obviously, all of this depends on your time scale. If you're trying to have a swing that's 5 to 7 days, then playing with the trend makes a whole lot of sense. If you see that the market is starting to flatten out, then it might take 14 days or something like that for something like an iron condor to make any reasonable profit. And if you're looking for a counter play, unless you've really timed it perfectly, which you're not going to, it's better to plan on holding that position for 20 or 30 days before you're going to see the turnaround you like. Obviously, the closer to the turnaround you can make it, the better, and the more money you'll have because you're doing the contrarian view. You'll be able to buy or sell the strikes that you want, and either for cheaper if you're buying, or sell them for more premium, and end up making more money. But again, if you have a long enough time scale, that really doesn't matter. Definitely use your indicators to see when the trend is slowing down. I think one of the newbie mistakes is that you're thinking that the waves that you see on the indicators, such as MACD or RSI, are going to go to the max, and then they're going to go to the min, and then the max, and they don't bounce around that quick. A lot of times you'll see it staying in one of those regions for a long time. So again, you need to plan your expiration date accordingly, or hold off until you really start seeing confirmation that it's starting to reverse. So, but I mean, generally speaking, the market doesn't turn on a dime. So keep that in mind with your expirations. I think that's where I struggled a little bit at first. I was doing too soon of an expiration, but I was playing too far out of a move, contrarian move. So if you want to do a shorter, we'll say 30-day, then I would definitely play with the trend. If you're trying to do a reversal, then it should definitely be, I would say, more than 45 even, to make sure that you have enough time to get it to move where you want it to. So recently the market's been super bullish, hitting all-time highs left and right, but my fear there is that they slowly grind up, the market being they, The market slowly grinds up, but then it's going to drop much quicker than it rises up. So I want an overall bearish tilt, and I'll show you in a second. But I don't want to go completely off the deep end where everything is so far bearish that I'm basically going to lose my money. But I want to break even when we're at these all-time highs for an extended period of time. And then with the anticipation that when it does drop, I'll be in good position. But generally speaking, it's never good to be a perma bear or a perma bull. That's where you're insisting that the market is going to crash, or that you're insisting that the market is going to new highs continuously. That's just not possible, obviously. So I'm not sure why people tend to get in that mode of thinking. I think it's just sort of built into their DNA. If you're a pessimist, then you're always going to think the market's going to crash. But reality is, even in 2008 and stuff, yes, obviously the market went down, but that's the best time to start buying. So, what are you, I don't know, what are you concerned about? But if you are a perma bear or a perma bull, you're going to make a huge amount of money once every decade or whatever, once a year when there's a big move. But the rest of the time, it's going to be dragging you down, and you end up losing in the end. It's the same thing as YOLOing. These people will hit an options play and make 100,000, and then 3 weeks later they've blown it all because they continue to make stupid plays that are statistically failures. So you do that enough times, and obviously you lose all your money. Normally, in a regular market, I would say that you want to weight your portfolio right in the middle, so that way the market can move in either direction and you can still be profitable. So I'm really only suggesting this for when it's extremely over its all-time highs, like we are right now. And again, this is just my opinion. It's not financial advice. But anyway, so to test your tilt, you can look at the beta weighting, and they have that in Thinkorswim or Tastyworks. I do like Tastyworks because it's right on your portfolio, so you don't have to go to any other screen. You can just constantly see your skew against the market. Okay, so Tastyworks defaults to SPY. I think when you do it in Thinkorswim, to be honest, I never do it there. But when you do it in Thinkorswim, I think you have to select the ticker you're looking against, and you want to do against the broader markets, which would be SPY. But with Tastyworks, you can change it to not be against SPY, but by default, when you sign in, you are automatically beta weighted against SPY. So as the market moves up, you'll see your graph continually move down. Imagine 3 weeks ago, the dot was in the center of this chart right here, but as the market continues to move up and up and up, you can see that at 310, now this is a couple days old, I snapped this picture. That was when SPY was at 310. But anyway, right now we're at around 313. Yeah, so when it was at 300, I was balanced correctly on the market. And then as it's gone up and up and up, normally I would rebalance my portfolio to maintain center over the market, but I've let this go into a bearish skew. And I have had to adjust. I think I was centered around like 298 before, and so I have slowly inched up my positions to now where I will break even right at 309 when all of these positions expire. But so it's not a you can never be perfect, and it's a continually changing graph, and it's a continual process of switching your positions as needed in order to rebalance. So some things you might do would be to roll out to a further expiration. That'll give you a little bit more extrinsic value. You can put on some more bullish or bearish plays depending on which way you need to skew it. That's the way to make the biggest amount of impact. Obviously, you can do some iron condors or something like that, where the market is right now, but that's going to take a lot more to push your portfolio to be centered correctly. Okay, so let's see if I missed anything here. Yeah, so I did mention, typically on swinging, I want it to be centered. When I'm day trading, my chart is worthless because I'm planning on opening and closing the positions all on that day, and then they're all going to be, I do probably 50-50 calls and puts, but you'll see the market dot in the middle, and then there'll be these long wings on either side for the calls and the puts for day trading. So, but on a swing trade, you want to stay pretty close to balanced. I already said when it's overstretched, I want to be a little bit bearish. And I really only think this makes sense on a slow upward grind. We've been hanging around the 310 area for a bit now. That's not to say, I mean, just tonight there's more trade news that they're going to postpone the deadline that I guess is tomorrow or today when you're watching the video. So I'm not sure if that'll bump it up to the next bracket or not, but in any case, if you're moving in a pretty good clip up the market, then I don't think it makes sense to have this tilt because it's going to very quickly become so far over. Your portfolio is going to be so far out of relevance that you're going to lose all your money. But we've been hanging out here for a while, so I'm okay being bearish. If I need to, I'll put on a couple bullish plays to rebalance, or I'll roll some things out, like I said. But all in all, I'm pretty confident that we'll have a dip down here fairly soon, and I'll be able to cash out on a bunch of those plays. Now, again, once I close those positions, I'm not going to open up a whole lot of new bearish positions. I'm really only letting my portfolio become skewed more than I would normally. So I'm not necessarily saying to purposefully skew your portfolio. I'm saying not to adjust as quickly, if that makes sense. That's basically all I had today. It's a holiday couple weeks here, so I'm not sure if I'll have videos out in the next couple weeks. I'm planning on it, but we'll just see how my schedule works out. Anyway, guys, thanks for watching. We're at 10 videos, which is pretty cool. You can see links in the descriptions for all my referral links for the brokers, and then if you could like the video, that'd be great. As always, my website is tastytracker.com. I am a huge believer in tracking all of your trades. I think that's where you can identify your patterns, where you're successful, where you're not, which tickers you're successful at, what times of the day, everything. If you're not tracking all of those data points, then you're going to miss certain things and take a whole lot longer to be successful if you're ever successful. So you really need to track whether you're using my site or not. That's fine, but you should be tracking either way. Anyway, so that's $9.99 a month. If you're interested, go check it out. There is a free demo. And then here's my disclaimer. It's only for educational purposes only. Thank you. Have a good day.